Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing, so how they're shifting and moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is creating a correction after a massive impulse to the upside. Now, this impulse came as a rejection away from a strong historical structure level. We spoke about this zone a lot of times. This was acting as previous resistance all across these years. Then the market broke above that zone, and what we know is that previous resistance, once it is broken to the upside, becomes support. And the market retested this level here as support and is currently rejecting it to the upside. However, no market can just go straight up in a green essentially line. At some point, every market will need a correction in order for new buyers to enter into the market. And at that point, the market can continue higher. So that is why we spoke about gold just a few days ago when the market was creating this impulse, explaining all the reasons for which there was a good probability of seeing this potential correction to the downside and the creation of a new higher low, because this correction gives the possibility for new buyers to enter and essentially for the market to create yet another higher low from a monthly standpoint. So now, if we are to focus on the pattern that the market is creating, we have to identify that since we have an impulse and a correction, if we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32, which is currently lining up at this area, which is acting as support. So there's a good probability of seeing a bit more bearish price action for the market to go and test this zone and then to see a potential rejection to the upside away from the area. Now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is that in creating this push to the downside, the market is also currently creating this big weekly M pattern. Now, in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside, to go and complete the M pattern at the neckline, which is the previous support turned resistance. So from a weekly standpoint here, what we have a good probability of seeing is a potential rejection to the upside and completion at the neckline. Now, when we have such pattern, it's not every time, but in my experience, when there's an M pattern, there's an increased probability of seeing a potential push higher and completion at the neckline. We can see, for example, here we had the M pattern, then the market went and completed at the neckline. Again, here we had the M pattern, the market went and completed at the neckline. So it's not every time, but in my experience, when there is such pattern, there is an increased probability of seeing a potential rejection to the upside, completing the pattern at the neckline, which in this case is exactly this zone. So let's keep all of this in mind and drop down on the daily time frame. Actually, the last thing that I want to show you here on the weekly is that the market hasn't really tested fully the structure support from a weekly standpoint, which would be this previous high, so this previous level of weekly resistance, which is now turned weekly support. So there is a possibility of seeing a bit more bearish price action and only then to see the start of this completion of the weekly M pattern. Now, dropping down on the daily time frame, what do we see? Now, from a daily standpoint, the market at the moment is very overextended to the downside. Therefore, there is definitely the possibility of seeing some accumulation of longs happening around this zone. Now, if there is an accumulation of longs happening around this zone from an institutional perspective, this could further increase the probabilities of a potential push higher away from this zone. Now, to check if institutions are actually adding longs inside of this area, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and let's check the data precisely for gold. Now, what we can see here is that with the last reports, net positions have been slightly decreased. We went from having 296.2k all the way down to 255.3k net positions. So in the very short term, institutions have been moving back to the bearish side for gold, therefore making it weaker. And the market has in fact been pushing to the downside. That is no surprise, as institutions are slightly moving to the bearish side for gold and the market is reacting. However, from a long-term perspective, we can see in fact how we're sitting with 255k net positions, which means that we have way more longs than shorts still from an institutional perspective on gold, with 336,000 longs compared to only 81,000 shorts. So clearly in the long run, institutions are still massively positioned to the bullish side for gold, which means that a correction gives the possibility to enter more longs, which is something that we have already seen by looking at the market from a monthly standpoint. So if the market here will continue lower, that would give the possibility inside of this area to see more potential institutional longing, which at that point could further increase the probabilities of a potential push higher, completing that weekly M pattern at the neckline. That is definitely a possibility. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to the most complete mentorship program ever. You have the possibility to gain access to all my courses, which will guide you from the basics to the most advanced topics like automated algorithmic trading using the MQL4 language. Then you will also gain access to the trading station software with a Telegram notifications integration directly on your panel. You will also have the possibility to have one-on-one mentoring directly with me, as well as having access to the COT data software, which is the one that you see me use very often in my videos. And if you continue to scroll down on the website, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.